He utilized his wide knowledge in this topic, and there will be an opportunity for the students and participants to ask their questions and clear their doubts after his lecture. So if you have got any doubts, feel free to type it in the chat box. Our guest will be responding to those questions after the lecture. So I once again cordially invite Mr. Shamil Sajjad sir to have his time talking to us. Okay, sir.
Am I audible? Can you hear me?
Yeah, definitely.
Thank you, Dilshad Saib. Assalamu alaikum wa rahmatullahi wa barakatuh. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله السميع العليم والصلاة والسلام على رسول الأمين وعلى آله وصحبه أجمعين. I have shared my screen. Is it visible to you?
Yeah,
Is the screen visible?
it is visible to us.
Okay. So the topic that we are here with today is stock markets, the Islamic perspective. So the way we have allotted our time is 40 minutes for the lecture and 20 minutes for the Q&A session, which you can decide how long it can go forward, because as we are organizing this program, I am committed to answering your questions on this topic. So as such, I don't have any time restrictions. You can see into your time restrictions, inshallah. So in this session, I will not be talking about how to invest in the stock markets, what are the qualities required to be a good stock market investor, what are the techniques that you should master in order to become a successful stock market investor. All such things will not be discussed here, because we have a much more important topic which has to be addressed before all these technicalities come into picture. That is the stock market permissible from an Islamic point of view? Is it permissible for a Muslim to go near the stock markets? Is it permissible for a Muslim to think about or actually invest or trade in the stock markets? So our discussion will be restricted to this particular topic. The second structure of the whole scheme of things, that is how to become a good stock investor, or what are the practical ways in which we can become good stock market investors, has to be taken up in a thoroughly different session, because it will be a gross deviation from the subject that we are addressing if I introduce you to all those concepts. The whole speech will be diluted. So I will stick to this particular theme, that is, what is the Islamic perspective, what is the Islamic standpoint on stock markets, inshallah. So first we need to understand what are stocks and what are stock exchanges. It's a very commonly referred to words these days as the presidential address. Dilshad Saab has said, people are getting increasingly interested in the stock markets, very much influenced by the lockdowns and the corona pandemic that we are facing. People are thinking about passive incomes, how they can use their time and energy on in a productive manner, etc., etc. So first of all, we should understand from a realistic point of view and from a technical point of view what actually stocks are and what actually stock exchanges are. Then only we can address the issue whether they are Islamically permissible or not. And as I can understand, the majority of the people in the audience belong to Dini Madaris, that is, they are well versed with the Usulul Fiqh, they are well versed with the basic tenets of Islam. They are well versed with the basic rules in fiqh, which are applicable in muamalat, etc., etc. So that makes the job much easier, because they already have an understanding of how a certain transaction becomes halal or haram from the point of view of the Sharia, Islamic Sharia, Islamic body of law. What are the criteria to be applied to transactions, to classify them as permissible or non-permissible. So let us first understand what stock exchanges are. I am increasingly using this diagrammatical representation, so that it will be much more easier for you to grasp the whole concept. So what is a stock market? Simply put, people have money with them in the form of savings. That is, you work, you earn, you spend, and you save a part of it. And capital can also be acquired in the form of loan from others. So people, individuals have capital with them, institutions have capital with them, and this excess capital has to be put in somewhere. It has to be invested somewhere in order to generate additional returns on that, in order to generate surplus wealth. So there are many companies in the economy that are undertaking the function of producing goods and services in the economy. The companies are producing everything that we are using. For example, the laptop that we are using for conferencing now, the software that we are using for conferencing now, the audio visual aids that we are using for conferencing now, everything around us are produced by modern day corporations. They are produced by companies. They are produced by business houses. So the process of production of goods and services start with amassing capital that is required for production. So capital comes from the general public, apart from those people who are actually producing these goods and services. They also have capital, but in modern day, post industrial revolution, economic activity has become so huge, so large scale. Due to large scale production of goods and services, capital from limited number of individuals are not sufficient for large scale production of goods and services. This has created modern day corporations, that is companies or corporations that we call. The idea of whole corporation is that there will be a limited liability structure, and there will be a large number of people coming together to pool their capital, so that large scale production of goods and services can take place. So first of all, the simple idea of stock market is that capital is pooled from a large number of people into companies or corporations, and these companies and corporations will issue subscription, or will issue certificates. That is, certificate that these people are proportionate owners of the assets and liabilities of the company, and also that they are proportionate owners of the profit and loss of the company. This is the whole idea. So capital comes in to the companies and corporations, and in lieu of that, against that, they will issue share certificates or ownership certificates, which we call shares. And a bundle of shares is commonly called stocks, common stock of a company. So stock come from the word share, that is a particular share, one share, two share, three share. When you bundle some shares, you have a when you bundle all the shares of a corporation, you have the common stock of the corporation, and the place where the transactions in these stocks happen, they are called the stock exchanges. So that is the very basic idea of the stock markets. So we have stocks which go to shareholders or stockholders, we can call them, who are the partial owners or the proportionate owners of the company of which they are holding the shares. For example, if you are holding the shares of ABC Company Limited, you are actually the partial owners of the company, although you are not participating in the day-to-day management of the company. The day-to-day management of the company is conducted by a board of directors and also a management team, a professional management team, which is reporting to the board of directors, and the board of directors in turn report to the shareholders of the company, and all the reports of the company are put in place, and they are put in front of the shareholders in the annual general meetings of the company. Now, that is the first thing, that is companies are taking money from the public, and the public who subscribe to the shares of the company, they are called shareholders. And in return for the capital that these companies have taken from the shareholders, they issue share certificates. And now there is another part to the stock markets, that is transaction between people in the shares of the company. That is, once you have subscribed, for example, I have bought shares of ABC Company Limited. I am having the shares now. At a point of time comes when I want to sell off the shares. That is, I want to liquidate the shares and convert it into money. Then I will not go to the company which has given me the shares. That is not possible. The company cannot address the buying and selling requirements of the investors on a day-to-day basis. That will affect the functioning of the company in a great manner. That will not be a practical proposition. So what the stock markets have created is a secondary market. So there is a primary market where the mobilization of capital happens from shareholders to the company. That is what is called the primary market. And the transaction between people in the shares of the company happens in the secondary market, which we usually call the stock exchange. The primary market is also located in the stock exchange, but what people usually refer to the stock exchange is for secondary market transactions. So stocks will be traded between people. So if I want to sell, there will be another person who wants to buy the shares of that particular company. So the transaction will happen between these two people. So this happens in the secondary market segment of the stock exchange. So this is the primary market procedure, which is also called the IPO market. So in the stock exchange, there is a primary market. There is a company. There are a lot of companies. For example, in India, the Bombay Stock Exchange, there are more than 5,500 companies listed in the Bombay Stock Exchange. We have the shares of more than 5,500 companies trading in the Bombay Stock Exchange, and it is the largest stock exchange in the world in terms of the number of companies listed. It is the largest stock exchange in the world. So what happens in the primary market is the companies approach the stock exchange and they issue the shares of the stock exchange to the public, which is called the IPO, that is initial public offering. And in turn for the shares issued by these companies, people will purchase the shares. That is, in other words, they will give their funds, they will give their capital to the company which is rolling out the IPO, and the company gets the capital required and people will get their share certificates in their hands. This is what is happening in the primary market in the stock exchange. There is another segment in the stock exchange which is called the secondary market. Secondary market is for the purpose of liquidity. What is liquidity? Once you issue capital, you cannot lock in the liquidity of the people who have bought these shares. For example, if I have bought the shares of the company, I should have a mechanism. There should be a mechanism in an organized stock market when I want my cash back in physical form. When I need liquid cash in my hands, I should be able to I should be able to go to a place and sell off my shares and obtain the physical cash in my bank account. So this is the purpose of the secondary market. So secondary market exists for the purpose of liquidity. Now we should understand that in the absence of an efficient secondary market, an efficient primary market will not exist. Now some people might ask why we should need why do we need a secondary market? The primary market is sufficient because the basic purpose of the stock market is to mobilize funds for the companies. But what we should understand is that people will be forthcoming to invest. People will be ready to invest, or the larger portion of the population would be interested only in liquid investments, because people have different investment horizons. Some might need their money back within 1 year. Some might need their money back within 5 years. Some might need their money back within 20 years, or some might even require their money back in 1 week. This will differ from person to person. We don't know. So different people have different investment horizons, and also they have different liquidity needs. So there should be a very organized way of liquidating the investments, and the secondary market is the outlet for liquidity in the stock markets. If you don't have a liquid secondary market, none of your IPOs will take off. If companies will not be able to successfully issue their shares in the primary market. So what we should understand here is that primary market and secondary market are complementary in nature. They support each other. One cannot exist without the other. Okay, so this is very important for us to understand the purpose of the primary market and the purpose of the secondary market. Now, what we should understand, the whole process that we have explained here, that is, we are having a company, we are having a number of companies. The function of these companies is to mobilize resources from people and to engage in productive activities. Excuse me. They will engage in productive activities. They will produce goods and services. They are the actual producers in the economy. For this, they need money. After industrial revolution, large scale production of goods and services have become possible. Businesses have become large scale. Markets have opened up. Globalization has come in. Goods produced in one country is being consumed in other countries, and vice versa. So all these things, all these mechanisms have necessitated large scale production of goods and services. Large scale production of goods and services is not possible without the participation of a large number of people. Okay, so this has brought about the advent of stock markets. This is what has brought about the introduction of stock markets, and now stock markets have become an inevitable institution in all developed and developing countries. Okay, so now we need to understand what is actually happening in the stock markets from a fiqhi point of view, from a shara'i point of view, how we will explain what is happening in the stock markets. The primary market or the IPO market is simple musharaka. It is shirkat al-amwal. It is the partnership in money. It is the partnership in wealth of people, which is already discussed in Sharia in great detail. There has been volumes of books written about musharaka and shirkat in fiqh by different authors. So it is nothing, it existed in a different form in olden days, but today stock markets also is nothing different. It is just musharaka. That is, different people are, a lot of people are coming together and they are pooling their money or resources into a common pool of activity. Okay, the secondary market which we referred, what is actually happening there? Secondary market, people are exchanging the shares of companies between them. We can call this buy-a-fee musharaka. Musharaka is already established through IPO. and whatever share I have with me, I will give it to another person, he will pay me the money. So we can call this by a fee musharaka, which is also not prohibited in Sharia. You can sell off your share in a business to another person. Another person can buy your share in a business from another person. It's all possible in Sharia. There is nothing prohibitory about this. Now, there is another segment which we have not explained till now, which is a bit complex. Only if you understand the basic mechanism of a stock market, you can attempt on this. You can go and try to understand what this segment is. But for the sake of understanding that such a segment is there in the stock market, we will name it, it is futures and options. Okay, what is happening there? In the basic shares that we are issuing in the market, in the secondary market, it is being traded, and in the futures and options market, contracts are made on these shares. Okay, you are building secondary contracts on these shares, and they are called futures and options. So we can call it bayu fi uqud ala al musharaka, bayu fi uqud ala al musharaka. Okay, that is contracts that is being created upon the basic contract of shirkat. Contracts that are secondarily created on the basic contracts of musharaka or shirkat, we can call it futures and options. Let us not bother about that much now. We will come to understand if we spend sufficient time on the markets. It's not possible to understand within 10 or 20 minutes. You will have to spend time, but it is not necessary or urgent to understand that right now. But there is a segment like that. So approaching that from a fiqhi angle or approaching that from a shara'i angle, okay, from the angle of Islamic jurisprudence, what is actually happening in that market is by fi uqud alal musharaka. Excuse me, I'm running a fever, so excuse the disturbance in the voice. Okay.
Sorry, can you put in the percentage slideshow mode?
Slideshow mode. Okay. Just a minute.
And just press F5 in your computer's keyboard.
Okay. Right. So this is what is happening in the stock market. That is, there are three segments: the primary market, the secondary market, and the futures and options market. And all these three segments can be explained from a fiqhi point of view or a Sharia point of view. We can address this and we can name it also. So going forward, this slide is not very relevant in this particular webinar, because the audience sitting in this webinar are all students of Islamic fiqh and Islamic jurisprudence. But just to put things in perspective, because there might be a minority of people who are not from a dini madrasa, or they have not studied Islamic jurisprudence in an academic manner. So what I will just say is that what Islamic Sharia, there is a Sharia to the religion of Islam, and the sources of Sharia is, there are two sources of Sharia, two classes of source of Sharia: the primary sources of Sharia and the secondary sources of Sharia. The primary sources of Sharia are Quran and Sunnah. Quran and Sunnah. Sunnah is the explanation of the Quran from the Prophet, and the secondary source of Sharia, Ijma, Ijtihad, and Qiyas. Okay, then you have the Maqasid al-Sharia, which we are not discussing here. So the basic sources of Sharia, we have to understand that within this framework, we have to make the rules of Sharia. No scholar can independently come and arrive with any conclusions. All he has to do is that he has to take the reference of the Quran and Sunnah and the secondary sources if required in all the conclusions that he has to come in terms of any rules in Sharia. So very basic principles of Sharia, which everybody in this audience might be knowing, but just to take the conversation forward, I am just reiterating that there are many classifications of affairs in Sharia. One is ibadat, one is muamalat. Ibadat is the transactions between the creator and the creation, and the basic rule in ibadat is that everything is prohibited except what is permitted and commanded by Allah subhanahu wa ta'ala or prophet being prophesied by Allah subhanahu wa ta'ala. So everything stands prohibited except what is permitted and commanded. That is the basic rule in ibadat. In muamalat, that is the worldly affairs of people, the basic rule is that everything is permitted except what is prohibited. Now for our purpose, we need to keep this in mind. When we are discussing anything in this world, what is the Sharia position of this particular thing? For example, what we are discussing now is the stock market. Is the stock market halal or haram? Is it permissible or is it prohibited? If it is not prohibited, it is permissible. Very simple as that. So dalil is required for prohibition, not for permissibility. In muamalat, you don't require a dalil for permissibility because everything in this world has been created for you, and Allah has permitted everything except what has been explicitly prohibited by Allah and His Prophet. We all know this particular basic rule. There is no need to teach anybody who is a student of religion about this particular rule. So stock market, what we have to see is that, is there anything, or are there more than one thing? Are there many things in the stock markets which are not permissible in the stock market? And if the permissible and prohibited can be separated, there is a distinction between these things, then you have to go away with that is prohibited. If permissible and prohibited are so much entangled together that it is not at all possible for you to fragment out the permissible and fragment out the prohibited, then the hukum is that you should altogether do away with such things. But stock markets, you can actually separate the permitted from the prohibited, because in stock markets the basic entity is the company. The basic entity that we are talking about in the stock market is the company which is issuing the share. Everything else is coming out from that company. I hope I am clear. The basic unit in the stock market is the company. Without the company, there is no stock market. So basically, there should be a company or different companies, and these companies should issue shares for people to buy into that. All the other contracts, all the other activities are actually secondary to this basic function of issuing shares. So in the stock market, it is possible to separate the permissible from the prohibited. Okay. So stock market is the part of worldly affairs. So the principle of muamalat applies to financial markets. We have to see what is prohibited and ward them off, and rest stands permitted. So what are the major prohibitions in muamalat, and specifically muawalat, that is the financial transactions? What are the major prohibitions? Everybody in this audience might be knowing there are 3 or 4 major prohibitions in financial transactions. There are not many. These 3 or 4 prohibitions have to be kept off. Everything else becomes permissible. One is riba, interest, usury. You should not be on the taking side or the giving side of the riba or usury. Or gharar, excessive uncertainty, which goes to the extent of uncontrollable uncertainty, or which goes to the extent of damage to the person who is actually going into that financial transaction. Then you have maisir, that is gambling, where the gain of one person becomes the loss of the other person, or the loss of one person becomes the gain of the other person. Such transactions are also prohibited in Sharia. So if you are not indulging in any of these transactions in a particular financial transaction, you are always in the realm of permissibility, right? So these are the basic principles that we have to observe. Now, there are certain Sharia screening norms that are being followed today in order to ensure, what I'm going to say is of specific importance. Please pay attention to this word. In order to ensure minimum compatibility with Sharia. Why am I using this word or this phrase, minimum compatibility? Why we can't have a total compatibility of Sharia with the financial transactions in the stock markets? Total compatibility can be achieved only if the administration is enforcing Sharia. I don't know whether there is anybody who will disagree with my words. Total compatibility with Sharia in a society or in a particular setup is possible only if the authorities are enforcing Sharia. If the authorities are not observing Sharia, if the authorities are not concerned about Sharia, if the authorities are making laws in a way to promulgate other things which are against Sharia, then it becomes very difficult to observe Sharia. Then only that we can do is to observe Sharia to the extent of our capacity. Only thing that we can do is that in order to be mindful of the basic injunctions of Sharia and do our best to not indulge in the greater sins that has been prohibited by Sharia. So this Sharia screening norms, which has been produced by Accounting and Auditing Organization of Islamic Financial Institution, which is the apex body of Islamic financial institution in the whole world. In the whole world, the apex body of Islamic financial institutions is Accounting and Auditing Organization of Islamic Financial Institution, which is usually referred to as AUFI, which is headquartered in Manama, Bahrain. Okay, every prominent Islamic financial institution in the world is a member in AUFI. What they have done, they have consulted the fatwa of the major fatwa bodies, which is represented by all sects in the Islamic community today. They have taken the fatwa of the most respected and prominent scholars, and they have codified all these things in a way that can be used in the practical world. For example, there is a person who is buying shares in the stock market. These codes are not mere statements of fatwa, which cannot be used as such in the stock markets. But the fatwa are codified in such a manner or translated in such a manner that these can be taken and used by a person who is interested in observing the basic Sharia rules. And that is called Sharia screening norms. The Sharia screening norms for shares. Now, Sharia norms and Sharia codes or Sharia standards are not only limited to the stock market. AUFI has produced standards for all sorts of markets like the commodity market, banking, insurance, and all such imaginable segments in the financial market and business. And we are now talking about the Sharia screening norms for shares for trading in the secondary market and in the primary market. Okay, so there are basically 4 levels of screening, and what AUFI is saying is that if you observe these 4 levels of screening, you will ensure at least a minimum compatibility with Sharia. Now you can make these norms even stricter for you at an individual level. That is up to you. For example, you want only zero debt companies. You are not going to buy and sell any company that is having any debt. That is up to you. You can do that. Okay, so these Sharia screening norms says that, first of all, what you need to see is that the basic core purpose of the company should not be any activity that is prohibited by Sharia, like making alcoholic beverages. It should not be a commercial bank which lends and borrows money on the basis of interest. Insurance, which is again not based on interest, etc., etc. All those companies which are having a core purpose which is repugnant to Sharia should be screened off. You should not deal in the shares of those companies. Second, the rule of buy ad-dain, that is, in a capital structure, there should not be so much so debt that the rule of buy ad-dain get applied to that particular share. Share is always a combination of debt and equity, unless and until it is an all equity company. If there is no debt at all, there is no problem. But when there is a debt component, the debt component should be so minimal and minuscule that the rule of equity should hold there. The rule of debt should not come into picture. So such a cutoff has been fixed at 33%, that is 1/3 of the capital. Less than 1/3 of the capital should be debt, not more than that. If a company has more than 1/3 debt in its capital structure, such companies are not fit to be traded in the secondary market, because in the secondary market, shares are traded at arbitrary values. Shares are traded at arbitrary values. For example, if the face value of a company is 10 rupees, you will never find a company being traded at 10 rupees in the secondary market, because it's an arbitrary market. Demand and supply will drive up and drive down the price of the shares, right? Now, another thing is the rule of surf, that is rule of equivalence. Cash and cash equivalence of the company should be less than 90%, or which are not less than 90% or equal to more than 90% are not fit for trading in the secondary markets. Okay, now all these screening norms is a topic in itself. We need a very deep understanding of the screening norms and where they come from, what are the underlying Sharia rules that are actually functioning there. But it is not possible to go into the detail and nitty-gritties of everything in 40 minutes. So I will leave the details for some other occasion, inshallah. The last thing, companies with Sharia repugnant income, that is income that is from impermissible sources. For example, interest being accrued on deposits. It should be less than 3% of the total revenue of the company. That is about the selection of companies for trading. Now there are practices in the market which should be avoided and which are not permissible even in permissible stocks. We should understand it very clearly. Even if you are trading in a permissible stock, these activities will not be permissible for you to do. First thing is short selling. What is short selling? You are selling with the permission of the broker, at the margin of the broker. You are selling a company and later trying to purchase it below your acquisition price and thus trying to make a profit. So you actually short sell those shares which are expected to go down because of increasing selling pressure in that share. This is not permissible because there is a Sharia rule that you cannot sell what you don't own. Okay, futures and options. There are Sharia violations in futures and options. In futures, that is, in those contracts which are deferred to a future date, you can only defer either the delivery or either the payment. Both cannot be deferred. If both are deferred at the same time, excessive uncertainty happens, and that will not be a valid contract as far as the Sharia is concerned. Okay, and there is also the element of gambling in futures and options. Futures and options are zero-sum games. Futures and options are zero-sum games, and all those people who make money in futures and options will make it only at the expense of those people who are losing money in the futures and options, because there is no value being created in the futures and options market. Then there is the practice of interest on margin. That is, your broker will give you a loan for trading in your account. He will forward you a loan in the form of margin money. That is, if you have 20,000 rupees, he might give you 4 times, 5 times, or even up to 10 times or 20 times. Whatever is his policy and capability, he will be giving you loans, and he will be charging you. If you carry it forward overnight, he will be charging you interest on that loan which he has given you. Now, you should not avail loans on interest for trading in the stock market. Okay. So these are the things, basic things which we need to understand as far as stock markets and trading in stock markets are concerned. Of course, we need a deeper discussion on the things that has been discussed here. But I believe that for the purpose of introduction, I have put forth those huge blocks of information in front of you, which you can use for dwelling further and thinking about it and your further research and study, inshallah. Maybe I have completed my lecture within this stipulated time, and as planned, we can move on to the question answer session, inshallah.
Okay, those participants who have doubts can either type on the chat box or unmute and ask.
Assalamu alaikum.
Walaikum
Am I
assalam.
audible?
Yes.
I am Ashraful Khalq. I already contacted you several times, sir. Okay, my question is that it was a wonderful presentation from your part. Wonderful presentation, very informative. Jazakallah khair.
Thank you.
My question is that in short selling, we are saying that usually short selling will be what I understood from the short selling is that whenever the share price of a company is coming down, there will be certain people who will take advantage of that special context, who will borrow certain shares from the broker and sell in the market. Once the share price is at lowest level, they will buy back the share and pay back the brokers. This is what I understood from the short selling. My question is that as we are saying that short selling is forbidden in Islam, we are saying that it is selling something that I am not owning. I am not owning that one. That's why I can't sell that one. But my question is that when we are coming to the classical test, the qarl, that means borrow something, it is defined that tamliku shay'in ala an yurda mithla. I am giving you something is to on a condition that you have to pay me back same thing. For example, if I'm giving you a mobile, that mobile will be owned by you. But the condition is that you have to give me back that a similar mobile next time. So my question is that same way in short selling, I am borrowing the certain shares from the broker. So now I own that shares. So what is the problem there that stopped me from selling that one and from exploiting that special context? This is my question. I think you're clear about my question.
Yes, your question is very clear. So I will like to answer this question in the form of counter questions. That is for greater clarity with regard to this thing. So what I want to ask you, Ashraf, is that can you sell something that is borrowed from another person? Is it permissible for you to sell a particular property which is not in your milkiyat, but you have borrowed it from another person? Do you have the permission to sell it, or do you have the permission only to use it without in a depreciating manner, without losing the value of that property? The question is, has the Sharia given the permission to sell something that is borrowed from somebody else? Is there a permission in Sharia like that?
Okay, sir, can I answer in my own
Yes,
way?
yes, yes, please, please.
Okay. According to my understanding, there are two concepts. One is ERA, another one is a curl. ERA means that I am giving you something for using. In that time, the milk will not be moved, milk will not be transferred. I will be the owner, and the person I gave that thing to, that person that I gave him that thing, he can use. But in the case of the current, that means I am borrowing something. The milk also, I am getting the milk also. That is what I am understood, because in classical text it is said that tamlik shay. Tamlik means to make you owner. That means I become owner. So my question is that, so I once I become owner of those shares, then what things stop me from selling and from dealing those shares?
Okay, if that is the case, what is the difference between selling and borrowing, as you have explained here? You are saying that even if you borrow it from somebody else, that is qarla. If you are indulging in qarl, the milkiyat has been transferred and you can transact it in any way you want to have it. That is the prerogative of a owner. A person who is having milkiyat in Islam has the right and his prerogative to transact his property in any way he wants, provided it is not against the commandment of Allah subhanahu wa ta'ala. So can you please explain to me, as you have explained here, what is the difference between the curl that you have explained here and actual selling of a good? What is the difference?
Okay, so if I'm not wrong, if I'm mistaken, I think I will be excused. Okay. Okay, since
No,
okay.
not a problem. You are actually making me think also, and I appreciate your question. Is a very good question. So please go on. We will discuss it. Please.
My problem is that what I have understood, that means when we are coming to the buy, the muamala, the babul muamala or babul buy, we have to say, in that chapter we usually say that whatever we are selling, we must have ownership on that thing. For example, if I'm selling a mobile, I'm taking a mobile an example. Okay, if I'm selling a mobile, I must own that mobile. Otherwise, I can't sell. That means, in another word, I have a right of ibra. We usually say that ibra, the right of ibra. If I own that right, then I can sell. My point is that my question. Okay, this is my confusion. Okay, my thing is that once I borrow something, it become in my milk. The only one thing is that I have to give back. I have to give back the same thing to the lender. For example, usually in our area, if I am just giving an example. Okay. I think so. Usually in our area, if a person is going to marry and he doesn't own something to give us a mahar, he will borrow from his mother, and after that he is giving that mahar to that wife. And after a certain period, once he become affluent, and once he become that buying a gold become affordable to him, he will buy same chain or same something like that and give back to mom. This is what happened. That's why I'm asking that once I have taken something, I have borrowed from something from you, that means I got the milk. But the thing is that there is a shart, I have to give you back. Same thing. So in the case of the share also, I am borrowing from the broker. So the milk is now transferred to me. Then what things stop me from selling that? Anyway, there's a shart. Okay. Thank you. If I took too much time, sorry.
No problem, no problem. So let me try to explain this particular thing. There are two concepts here. That is, one is, we all know about the trade of salam. That is salam. That is, if there is actually a trade, that is, for example, in this case, there is a broker and there is a client. The client wants to sell certain shares in the market. He is not having it, but the broker is actually having it in his pool account. If the milkiyat has to get transferred to him, there should be actually a buyer. It will not get transferred to him without without a buyer, and just because there is a qarl between them. If milkiyat gets transferred between people with qarl, then the whole concept of qarl will not be different from buyer, and the whole concept of buyer rests upon the transfer of milkiyat and the retention of milkiyat. So milkiyat is a very central concept in Islam, and it is only through the transfer of milkiyat a sale is concluded in Islam. First point is this thing. Okay, so if there is a forward sale, as you are saying, you are not having the shares, it has to be at least a salam. It has to be, that is, you are getting the shares today. Sorry, it's by a muajjal, that is, you are getting the shares today, the commodity today, or the goods in question today, and you are making the payment later, either in cash or by selling the same shares in the market. Okay, so what we have to understand here is that there should be a clear distinction between, and there is a clear distinction between qarl and bay' in Sharia. Second, let us approach this from the qarl point of view. Let us keep the milkiyat part away, and even if you are borrowing shares from the broker and taking that shares to the market and selling it, what has been recorded in the fiqh narration of this particular concept is that shares is not a commodity fit for borrowing and lending. That is also separately recorded, apart from not to indulge in short selling as such. Shares is not a commodity that can be used for borrowing and lending. In Sharia, there are different commodities which are not fit for borrowing and lending, but shares can be pledged. They can be pledged. It is fit for pledging. It is fit for pledging, but it is not fit for borrowing and lending. What is the reason? Because the price of the shares constantly changes. It keeps on changing from minute to minute. So, because you can never repay the shares to the lender in the same price as he has given it to you. For example, if the price of the share was 100 rupees when the lender was giving it to you, by the time you repay the same shares to his account, it should be either below 100 or above 100. It will be a very minute chance that you will be able to repay the shares at the value of 100. Now this gives the possibility, or this opens the possibility, not the possibility, it either creates an excess or a reduction in the amount of loan given to you. And any such loan which results in an excess or a depreciation from the capital that is actually transacted between the between the lender and borrower is termed as riba in Sharia. So short selling is not permissible because of two reasons. One, it is that if you are treating it as buyer, you are selling something which is not in your ownership. Now let us for the sake of argument take your argument that the broker has transferred the milkiyat also to you. It was not a mere qarl. Yes, actually, given a permission. It was a commodity. There are two types of commodity in Sharia: qimi and mithli. Qimi and mithli commodities are classified into two classes. Mithli that you are talking about here is mithli, that is those commodities which can be replaced with another class of the same commodity. For example, wheat, gold, etc. You have 10 ounces of gold, you bring another 10 ounces of gold, the transaction is settled. But you cannot do that with the same thing with cows or buffaloes. So shares are mithili. 10 shares of Reliance Industries is 10 shares of Reliance Industries with a different serial number. I agree that. But the problem here is that even if you tend to borrow or lend shares, borrowing and lending of shares is also not prohibited in Sharia. Shares are not a commodity which is allowed to be borrowed or lent in Sharia, because shares that are transacted in secondary market in Sharia are subject to frequent and minute price fluctuations, minute by minute and second by second. So there should be a variation in the amount that is lent and returned, and which gives rise to riba, that is excess or reduction in the loan. I hope that is clear for the point of view. I'm going to send you, you just message me on WhatsApp. I will send you the exact text which explains these parts from the
Okay, Jazakallah khair.
of office standards. I will send you the English text of it. You can read it and have further research on the subject. So lending and borrowing of shares is also not permitted.
Two people have raised their hands. One is SMK. You can ask.
Assalamu alaikum.
Alaikum salam.
Sir, my question is, can we trade in TCS and Infosys shares?
Yeah, the Sharia screening process, which I had introduced here. If these two companies pass the Sharia screening process, then it is okay to trade in such shares, no problem. Now, TCS and Infosys, basically they are software companies. There is nothing prohibited about writing softwares and selling softwares. So the basic screening is always passed. Now, the second screening is with regard to debt. Now, debt, you should be very careful because it is a very clear injunction in Sharia. That is by Adin, that is the transaction of debt part. It is a very clear rule in Sharia. So you have to keep on tracking the financials of these companies every quarter, because any company can borrow money at any point of time. You don't have a control over that, and any company can decide to borrow or not to borrow. It is up to them. If they want funds and they don't want to come out with additional shares, what they are going to do is approach some banks or financial institutions and borrow money. So you have to track the quarterly results of the company, take the balance sheet, or you can go to some website which condense all this information for users and present it in a very easily understandable manner. There you have to go and check the debt equity ratio, whether it has increased or decreased. If it is below the stipulated level, you can always purchase. The rule of surf, that is with regard to cash. Actually, that is a rule in Sharia where there is a difference of opinion. According to the Hanafi madhab, if you have a company and you have 90% cash in there and 10% of the business in the asset form, even then you can buy and sell the company at any price you want. What you have to do is that whatever is the cash, you have to consider that as the price of the cash. Whatever is the asset part other than cash, the excess payment can be considered as the price for that non-cash asset. So it is unless and until it is not 100% cash, the business is not 100% cash, any other combination is not a problem according to Hanafi madhab. But the debt does not have any such leeway. Every madhab and every prominent scholar is of agreement that it has to be observed very strictly. So 33% of the market cap, you can go safely, rather you can just go by debt equity ratio. Always try to keep it below 30%. if you see that the debt equity ratio of the company is above 30%, always avoid such companies. As of now, what I can understand is that Infosys will not be, I will have to check on this because I don't have an holding in either TCS or Infosys. But if my guess is not wrong, TCS might be Sharia compliant, but I will have to check on Infosys. Maybe I can check it for you. You can contact me tomorrow over WhatsApp. I will check it for you and tell it.
Sir, I have one more doubt. You are telling, okay, this is okay, Sharia complaint, okay, but their main business is dealing with the bank software making, and they may be participate in the future trading, and they have their main profit may be from bank interest. So indirectly, they are indulging with the non-Sharia complaint. So whether we can go for participate in these companies if they are doing Sharia.
So you said
Sharia
three things here. Right.
Yeah, tell me.
No, you said three things here. First, you said they might be giving software for banks. First thing. Second, you said that they might be engaged in futures trading. Software companies don't engage in futures trading. How can software companies engage in futures trading? Futures trading is engaged in by financial companies, right? Software companies don't have the activity of futures trading.
No. See, their main.
Now, the third thing that you said, they might be having bank deposits which is earning interest. That you can find out from the balance sheet, and we are screening it in Sharia screening norms also. What does the Sharia screening norm say? The interest bearing income of a company should not be more than 3% of the total revenue. What does that mean? The meaning of that particular screening is that any company, even if you are running a company in India or in the Middle East or anywhere, you will come to know that in an environment where you have commercial banks based on interest, you will have to deal with all these banks at many points in time. And even if you don't want to earn any interest, just like in your SB account, you are getting interest into your bank account, accidentally there might be some interest infiltration into the accounts of the company, just like the accounts of individuals. So this 3% is the tolerance level for such accidental infiltration of interest. Anything that is above 3%, Sharia screening norm assumes that the company has purposefully invested its funds in interest-bearing deposits or interest-bearing bank accounts. So such companies will be automatically screened out. Futures trading does not hold good. That is a wild guess. Software companies don't engage in futures trading. Okay. Now
currency the futures they may be having. Maybe the currency futures. Their main business is from US, and there may be some currency futures, obviously, for hedging purpose.
Okay, that is also possible to know it from their balance sheets now. How much deposits they are having in currencies. Okay. So if it is, if it is, they are having a currency holding in their balance sheet, that will come in the liquidity part of the company. So that will be screened out in liquidity screening. There will be a particular tolerance level as far as currencies are concerned. Now the first thing is with regard to writing softwares for banks, conventional banks. Now what we have to understand here is that the core purpose of the company is not to write softwares for interest-bearing institutions. That was not the case. We have to differentiate this. The business of the company is to write software. Even if it was a hospital, even if it was an educational institution, even if it was any other kind of institution, they will provide you with software. But it is a reality that one of the biggest consumers of software are financial institutions, because the whole financial business is run on softwares and systems, right? So it is possible that the portfolio of a software company is having a large skewing towards financial companies. It is not their fault. Okay. Now the thing is that you can either take an individualistic stand unless and until the core business of the company is writing software for financial institutions which are engaged in prohibited financial activities. If that is not the case, it is a general software company, but by chance it is having a large portfolio of financial institutions, you can take an individual stand that as the largest portion of the revenue is coming from financial institutions, you can always decide not to invest in such companies. But Sharia screening norms does not have a screen for that particular thing, because here the interest, the revenue is not earned in the form of interest. Here the revenue is earned in the form of a value acquisition for a useful service that you are providing. But as I told you, you can always, as I told you, the basic Sharia screening norm is a basic framework. You can always try and add different types of qualitative frameworks into that particular Sharia screening norms and tighten the mechanism of your stock picking. You are always free to do that. There is no compulsion that you should invest in TCS and Infosys. Nobody is compelling. If you don't feel comfortable with TCS and Infosys, don't invest.
Assalamu alaikum wa rahmatullah. Let me ask my question. Hello? Hello, shall I ask my question?
Yes, of course, you can.
Okay, while explaining the Sharia screening, Shamil sir said the debt to equity ratio should be less than 33%. That is 0.33. It should be less than 0.33. But my question is, what is the proof in Sharia which allows that our debt to equity ratio should be less than 33%? My question is, according to my understanding from Sharia scholars, even a small interest bearing loan is haram. And if we know particularly the company is having such interest bearing debts, we should stay away from the company, and those stocks are haram. Then how can we say 33%, up to 33% it is allowed? That's my question.
Assalamu alaikum.
Walaikum salam.
Yeah, just got disconnected. I have joined again. Am I
Have you
audible?
heard his question?
Yeah.
Sir, have you heard his question?
No, I got disconnected. Can you please repeat? Ask him to repeat the question.
Okay, Hadith, can you please repeat your question?
Okay, while explaining the Sharia compliance, Shamil sir and many Sharia screening committees across world says about this 33% tolerance for interest bearing loans. But according to what I studied from the Sharia scholars, it is very strict that even if there is a small percentage of loan, interest bearing loan, we should stay away from purchasing the shares of that company. So I need the clarification for what is the proof from Sharia sources for this tolerance of 33%.
Yeah. Actually, brother, the 33% tolerance is not for interest bearing loans. It is for debt as such. Am I making myself clear? That is why we mentioned the rule of bay'at dain there. So let me explain to you. The basic rule of bay'at dain is that whenever debt is transacted between two people, it has to happen at par value, equal value. For example, you and me engaged in a loan contract. That is, you gave me 1 lakh rupees in loan. Now I have to repay it to you by 31st December 2021. That is the time frame, the time limit that you have given me for returning the loan. What you did, you required money before December 31st. So you just introduced a third person to the contract and you told me that you return the money on 31st December to this person. I am taking the 1 lakh rupees from him now because I require the money right now because I am in an emergency need of the money. This is transfer of debt. It can happen in many situations. Now, the basic Islamic rule is that when you are transferring money from one person to another person, or when there is a transaction of money, sorry, not money, the debt, it should be at par, at equal value. There should not be increment or decrement of the value of debt. If there is a contractual increment or decrement of the value of debt, it is riba, it is prohibited. This is the basic rule of bay'at dain. Now let us come to the case of shares. If there is a company, say XYZ company, the XYZ company has issued 100 crore rupees worth of shares. Okay, the total face value of shares is 100 crore rupees. There is no debt. The company has not taken any loan. Now you need to understand the formula. Capital is equal to equity plus debt. Capital of any company is equity, that is own funds. Shareholders funds is called equity. Okay, debt is what you borrow. Equity plus debt makes up the capital of the company. So when a company is having a particular capital, we call this capital structure. That is how much debt you are going to use in your capital structure is called, if you are using some debt in the capital, it is called leverage. It is called leverage. Now, if a company is 100% equity, there is no problem because equity is used to finance the assets of the company. The company is having fixed assets, plant, machinery, stock, etc. Okay, the company has used equity to finance that. Now, what we are trading in the stock market is the representation of the equity of the assets and liabilities of the company, right? So if a company is 100% equity, there is no confusion. What is the Sharia rule regarding equity? You can sell assets at any price you want. If the buyer and seller agrees on a particular price, you can transact. If the company has borrowed all the capital, 100% debt, then also the rule is clear as far as Sharia is concerned. You cannot trade the shares of that company at arbitrary values. How can you trade? You can only trade the shares of that company at face value without increasing or decreasing the amount of debt that is actually originally there. Now, when it is between these two things, then there comes a problem. Because joint stock companies did not exist in the time of the Prophet, this becomes an ijtihadi issue. Scholars had to find a solution for this problem because in Prophet's time, there were no joint stock companies and mass scale trading of shares were also not present in the time of the Prophet. So that sat together, there was, the official meetings of the fiqh councils, and they recorded it there. They had extensive deliberations on this issue, and they said that when two things are there, what we have to see is that what is the majority component of the two things. Okay. Hukumin li kullin, hukumin li aktharin, hukumin li kullin. Whatever applies to the majority will apply to the whole. Hukumin li aktharin, hukumin li kullin. That is, the basic rule is that if the majority is equity, the rule of equity will apply. What is the rule of equity? The rule of equity is that you can trade as you like. Now, what is if the majority of the capital is debt? The rule of debt will apply. What is the rule of debt? You cannot change the face value, but transactions in the secondary market always happen at a different price than the face value. That is, we are screening out those shares. We are not at all trading in them. If the shares were available at face value, we could have traded. Okay. Now the question comes, how do you decide majority? Is it 50%? As we usually define majority is that more than 50% is majority. 50-50, you don't have a majority for either of the people, for either of the sides. 51% or 50.05%, you have a majority. But here, the scholars went in a more conventional fashion. They went through the whole book of financial literature in Sunnah and the Quran, and they found this hadith of wasiyat. They found this hadith of wasiyat, which is very familiar to everybody. There is no need to explain the whole hadith. The hadith is that a person approaches the Prophet. He wanted to give whole wealth, his whole wealth in wasiyat. Prophet did not agree. Then he said, I want to give half. Prophet did not agree. You cannot do that. You have to leave it for your heirs. Then he said 1/3 I want to do for my hereafter. The Prophet, after a while of silence, he said that, okay, you do it, but even 1/3 is very high. Even 1/3 is too much, he said. So what these scholars reasoned is that, now there is no contradiction regarding the basic rules. Please note that we are not discussing about the basic rules are already clear. Now we are only, the scholars are only trying to determine what is more, what should be considered as majority. So they said, as the Prophet has regarded 1/3 as too much in the case of a financial matter, we should also regard 1/3 of debt to be too much in the case of capital structure, to be regarded as in the side of debt. That is, they said, you don't have to hit 50% or 51%, even if the debt component is 33%. That is the translation of 1/3 in percentage terms. It is actually 1/3, 1/3 of the capital structure. When you actually convert into 33%, that is multiplied by 100, you get 33.33%. That is how 33% came into existence. Okay, so it is not with regard to interest-bearing loans. If anybody has told you it is only with regard to interest-bearing loans, then they have not actually understood the point. It is their misconception that it is with regard to interest-bearing loans. The actual thing is that it is applicable to any kind of loan in the capital structure of the company, even if it is non-interest bearing loan. But the thing is that in today's world, we don't have any non-interest bearing loan, because if you want a loan, you can get it only from interest bearing, interest-based institutions, interest-based banks, interest-based NBFCs. Where else do you get such huge amounts of non-interest bearing loans? Not possible. Okay, so please, get away with this misconception that 33% rule is with regard to interest-bearing loans. Now, the key point of your question: interest-based loans are actually not permissible in Islam. There is no doubt about that. Any kind of interest, even if it is 1%, 2%, 3%, it is not at all permissible in Islam. There is no doubt about that. But there are different types of opinions among scholars. How should we deal with such an economic situation where the interest-bearing institutions have a command over the world economic order? Now, even if you want that person who is asking this question, even if you want to run a company at a very large scale without ever having any contact with such interest-bearing loans or interest-based institutions, it is going to be very, very tough. It is near impossible. Okay, so that particular practical aspect has been taken into account by the scholars, and they have said that larurat, this is a necessity of time, and any person, any company who is mindful of the commandments of Allah should take all precautions and do everything in their capacity to stay away from such loans and interest-based contracts. But if it becomes that, if you feel that you don't have any other way, then certain leeway is there in the Sharia, where it makes temporarily permissible for you to go into something that is impermissible to the extent that is required and to the duration that is required. Leave it there. That is the thing. Now, I again tell you that if you are not comfortable with interest-bearing companies, you don't want to use the 33% rule. You say that I don't even want 33%. I always want zero debt companies. I tell you that is good. Your decision is always welcome. And the good news is that in the Indian stock market, you can find so many zero debt companies which you can invest in. It is a fact. I'm not inviting you to invest in the stock markets. I don't want to invite anybody to do something that they are not comfortable with. It's a pure matter of choice. If you want to invest, you invest. Otherwise, you don't invest. Stock market is not the only way to make money. Okay, but what I tell you is that if somebody says that 0% is only thing that I will agree, I'm not going to take anything above 0%. You will find such companies also. And what you can do is that you can create a portfolio of only zero debt companies, which is also possible. But key important thing, as far as Sharia scholars like you are concerned, the 33% rule is not with regard to interest-bearing loans. It is with regard to all types of loans, and the connection of the 33% rule is with the rule of bay'ad in Sharia, not with taking or giving interest. I hope that is clear.
Hello.
Yes.
Shamil sir had explained the thing, but here two things in his explanation I feel problematic. The first thing is the mixing of two things. Then if majority is from equity, then it is fine. That was his first point. But what I had studied from Sharia scholars in Kerala, especially particularly in Kerala, is that even the slight mixing of haram, we should stay away from that, as the loan. The rule is for generally for all debts and not exclusively for interest-bearing loans. Okay, I understood.
Page number 13 and 14.
But
yeah.
But the issue is that the income generated and the dividend we get from interest-bearing loan, it is according to our understanding from scholars, it is haram. That is the first thing. Second thing is that you said the rule of wasiya. That is 1/3 is fine. More than that, we cannot give wasiya. And taking that wasiya rule for this case, it is not at all matching anyway. It feels like it is just an adjustment for people, for those Sharia screening companies with the companies for people getting involved in stock market. That is what I am feeling. This is the 2 points I wish to convey.
Okay, first of all, see, debt in capital structure, you will not get money. Please try to understand. We should also have a basic understanding of finance also for understanding these things. When you have debt in your capital structure, you will not get interest. You have to pay interest. So there is no question of mixing the revenue of the company with interest income. Interest income you will get only when you have an interest bearing deposit with some banks or some financial institutions.
Paying interest is also an issue, sir.
No. Let me clarify whatever you have asked now. Then you can go into more elaborate questions. So the first thing that you have said here does not stand. See, capital structure, debt in capital structure means what? You are borrowing money and you have to pay interest. So your first thing, interest coming into your revenue is false. That does not stand. Okay, so you have got that wrong there. Okay. Second thing, I have already told you that in my explanation for the first question, there might be people who are actually not comfortable with even using anything that is above zero in the capital structure. That is, they believe that you should never use any interest bearing loan or interest bearing finance in your business at all. It is not at all permissible. Okay, this might be their stand. I respect that stand, but I tell you that it is not possible to practice in the real world in 95% of the cases. And that will be appreciated and understood by people who have any sort of connection with the business and finance, who have attempted any sort of business. Okay, this is my personal view. Okay, keep it there. We have no more debate on that particular point. Okay, I will come back to the questions. Okay, so what I'm telling you is that if you want to analyze how this particular ijtihad has been done, how the process of qiyas has been done, that is a shara'i mas'ala. I don't want to elaborate or discuss on that also, because I am not one among the Sharia scholars. I don't belong to that class. Now, what I am telling you here is not something that I have found out. Personally, I have not come to this conclusion. 33% should be put here, etc., etc. This has been found out by the Islamic Fiqh Academy. Islamic Fiqh Academy is no ordinary academy. It is an academy which has representation by scholars from all over the world. Majority of the countries who represent different sects of the Muslim society. Okay. Now they have held a meeting, council meeting. They have studied the whole whole topic, and they have arrived at a conclusion. They have recorded it in their publishing. They have published the finding also. We are only taking that as a reference, right? So what you can do is that you can go back to the original text, study it for yourself, and for your scholarly knowledge, you can do research on that, and then you can maybe say it is right or wrong, or you don't agree with that, or you don't you agree with that or don't agree with that. As you can know, in any council findings or in any fatwa that has been recorded, there will be people who disagree with that. Any other thing, not only in this case, many of the fatwa which has been given, there will be one or two people or the minority group which is disagreeing with that. Okay, but on the majority consensus, they pass it as a fatwa. And also they note that such and such people have disagreed with this. So that particular exercise, it is not our cup of tea. What we are saying is that it is there. It has already been recorded. Now, as I already told you, if you say that you need everything picture perfect, say that no transaction with any sort of financial institution is permissible. What I would say is that as a person of the real world, as a person who is involved in business, even if you don't want, even if you hate it, I dare, there is nobody in this practical world who is in one way or the other who is not touched by the dust of the interest, as Prophet ﷺ has said in his hadith. Okay, so the fatwa part, I am not responsible for that. I am not saying that it is true. I mean, it is correct or incorrect. Their process of ijtihad was right or not. Their qiyas is right or not. I don't know. The process is up to them. They are the scholars. They have done it. What I say is that I again want to repeat: if a person is not comfortable with the 33%, 20%, anything, any sort of debt, I have already told you, you still have options that there are zero debt companies and there are companies with no interest income that is available in the market for investing and trading. And I would like to leave that topic there.
Okay, we are running out of the time, and still
Shamil.
there are a lot of questions.
Hello. Assalamu alaikum. Can I ask the question, please?
Okay, sure.
Islam.
Yeah, Assalamu alaikum, Shamil bhai. Shamil Sahab.
Walaikum salam.
It is a wonderful session and it is very enlightening. And this is very informative. I'm very impressed with the session. And I already deal in the markets even before the lockdown. And during the lockdown, many retailers have joined the markets, huge number. And also, as you have given the honest review that compatibility, we can minimize, I can maximize the compatibility with the stocks. Yeah, with the Sharia compliant stocks while the screenings is concerned.
Yes.
But surely important thing would be profit also. Are we making profits? Also, that will be concerned after screening out the stocks or say. My question will be like, first thing is, if we are dealing in the cash segment in delivery, is day trading, even if we are not taking the leverage, buying in the morning with the volatility and selling it in the afternoon. So how do you, what's your view on that? First thing, it is done in the cash, not with the leverage, by taking margin. Second thing is, if it is debt, there can be institutional debt, like institutional debt from the finance or financing institutions like banking. But in the recent IPO, we have seen the Glenmark's IPO has been there, and it has been the debt source from the parent company, the parent company of the pharma. It's not, it cannot be said as institutional. How do you view that debt as well? I just wanted to know your views on that in the cash segments. And finally, I also see you are associated with the firm investment firm there. So what is on the offering is there? I'm also interested in that. Thank you.
Yes, sir. So you have basically asked three questions. The first thing is that Sharia screening is all good, but what about the returns? After we screen out so much companies, is there anything left for any investor to buy and profit out of it? Sir, what I want to tell you is that as a person who is in this particular activity for the last 10 odd years, let me tell you two or three things which might interest you also. First thing, cash segment and cash-based investment is the best way to go as far as wealth building is concerned. There is a general thing that I am telling you. You might have also listened to a lot of lectures from Warren Buffett and people like that, Peter Lynch and all.
Yeah, sure.
Yeah, where you can see the mechanics of, investing regularly and investing with a lot of margin of safety and undervalued companies, which is actually wealth creators. So that is an investment concept thing, which I'm not going into now. So the thing is that when you screen out all the companies, the thing is that statistically, India has the largest number of Sharia compliant companies. When you apply the universally available Sharia screening norms, India has the largest number of Sharia compliant companies in the whole world. India has more Sharia compliant companies than any of the Middle East countries. India has more Sharia compliant companies than any of the countries in Europe or North America.
Yeah,
So
true. Even not in the Islamic countries they have.
yes, that is because we have a very old stock exchange and we have so many companies listed out here. And India is a very huge country. Okay, so the thing is that huge country with a huge population. So the thing is that we have such a big universe. Even if you screen out companies, what we get is the cream of the market. Cream of the market is not those popular companies. People know about a lot of companies which we call the popular stocks, but money is not made in the popular stocks. Money is made in the obscure stocks, which people are not able to find today, but which are real gems, which have such strong financials, which have such a strong product for service portfolio, which make steady growth in their sales and profits, and also have very strong balance sheet. And just because they are not popular, their valuation is so low that you get it so cheaply by paying a fraction of their potential market valuation, which you get below PE multiples of 10, right? So such companies are so much so there in the country. I will just give you one example. You just go look at one company called Brightcom Group. Brightcom Group was in our radar some 6 months back at a price of 4 to 5 rupees. Now the company is at 50 rupees. It has returned 10 times in just a matter of 5 to 6 months. So everything is perfect. The Sharia screening norms are all passed, and these are the companies which make a real value for investors. So there is no need to worry that even if you screen out so many companies, actually you are screening out the noise from the market by applying the Sharia screening norms. What happens when you apply the Sharia screening norms? You screen out the highly leveraged companies. Leverage is always a time bomb. Big companies have failed because of huge leverage, overconfidence. They think that they can handle any kind of leverage and they have the ability to pay back any kind of leverage, which has proven wrong time and again. Many companies have failed just because they leverage too much. So what does the Sharia screening norm tell you? Don't leverage too much. Leverage is not good for your health. So don't put your money in such companies. Liquidity screening, how does that protect you from a Sharia point of view? It protects you from paper companies, box companies, those companies which are existing only in paper, which don't have any real economic activity. All that they have is an address, and they have they are listed on the stock exchanges, and eventually promoters are siphoning money out of it, and you get protected by that. And by screening out those companies which are harmful to the society, like the all those companies like all those blood-sucking NBFCs and all. So everything, Sharia screening only protects you and makes you a better investor. It never takes out any sort of efficiency from you as an investor. It only sharpens you as an investor. I am not just telling this you for an ornamental purpose, just because we are having a webinar on a stock market perspective. I mean, from an Islamic perspective, I'm just telling you this is a truth which I have experienced in my life through the last 10, 11 years. I have seen in front of my eyes how the whole system actually protects so many naive and naive investors from all those potential mistakes that they might do in their investment journey. Beforehand, they do it, they commit it. So it is a protection from Allah subhanahu wa ta'ala that you don't go into such areas which actually is going to harm you. Fine. Okay. Now the second thing, second question that you have asked me is with regard to intraday trading, right? Now the intraday trading, you have already said that you are not using leverage. Now, if it is there is no leverage, intraday short selling also we have discussed, so there is no question as far as you agree to that point. There is no question of shorting and buy. So what you are going to do is that intraday long, you are going to buy, and before the market closes, you are going to square off your position.
Exactly.
As far as Sharia is concerned, there is no problem with in this particular transaction. Why? Because in Sharia, possession, two things are necessary for selling something. It is not only you also require possession. So you need milkiyat and you need qabul. Even if you have milkiyat, but you don't have a qabul of the substance which you are going to sell, such a sales transaction will be treated as invalid in Sharia. There are many examples which can give given. A simple example would be a vehicle which has been stolen. In that particular condition in which the vehicle was not in your possession, you engage in a sell transaction of that vehicle. That particular sell transaction is not valid from a Sharia point of view, because you had ownership, what you did not have controlling possession of that particular thing when you got into a sell transaction. Now this is the thing. You need two things for any sale transaction in Sharia, that is milkiyat and qabul. Milkiyat is ownership and qabul is possession. Now possession is also of two types: qabul al-hukmi, qabul al-hakiki. That is real ownership, real physical ownership, or qabul al-hukmi, constructive legal ownership. Either of these two is sufficient for any kind of sale transfer. It is not necessary that everything should be in your hand if you want to sell that. So some people say that some people in the maybe 10-15 years back, some scholars, they used to say that you cannot engage in stock market because stock is something which you cannot see, which you cannot touch, which you cannot feel. It is not actually any kind of good that you can actually engage in sales transaction. Now nobody is saying that, because people have understood the folly what they were talking about some time back. Even in this last 1.5 hours or 2 hours which we have been interacting, nobody has asked that question, because stock is not a thing, it is a right and it is a financial contract. Okay, so coming back to your question, when we are buying something in the morning or whenever during market hours, you bought something, the milkiyat is already with you, although the legal transfer of ownership will take 2 days. Now this is my opinion. There might be people who might disagree with me, but I am putting forward this opinion after seeing the office standards also and FICH council recommendations also in this regard. What they are saying is that if a person has completed the formalities for possession, that is sufficient for him to sell it. It is not necessary that he should physically receive it in his possession. Now let us explain with this with a particular example.
So
For
we had
example,
to conclude the program by 10 o'clock.
so if you are a dealer in vehicles, it is buying and selling vehicles is your bread and butter. What you do is, for an example, you bought a particular vehicle through your agent in Delhi. Okay. So that particular vehicle is there in Delhi in your possession, and this agent was taking that vehicle from Delhi to Kerala. During his trip from Delhi to Kerala, which might take 2 or 3 days, in Bombay or some other place, he met with a potential seller and the price was good. So he informed you that this particular person is offering such a price. So you told your agent that please sell off the vehicle there and return with the money. Now, the vehicle has not come into your physical possession, that is qabl al-hakiki. but the vehicle was always there in your possession in the form of qabl al-hukmi, which is sufficient in the sight of Sharia for any sale transaction. So with intraday transactions also, the thing is that if you have money in your trading account, for example, you are buying shares worth 1 lakh rupees, okay, you have sufficient money in the bank, in your trading account, which will be debited at the end of the day. So there will be no default there. Okay.
Yeah, right.
Now that is already taken care of. Now you have the clearing corporation on the other hand, on the other side, which is the universal counterparty for all traders in the market. No trader is meeting face to face. If you are buying shares that is sold by some other counterparty, how are you so rest assured that at the end of the day your shares will get delivered to your demat account? How does this happen? So it's such a beautiful mechanism. Lakhs and crores of trades are getting executed every day. Everything is getting delivered because that is a counterparty which is a government body called the Clearing Corporation of India, which is called the universal counterparty to all trades in the stock market, and which sees to it that it has put in place such a strong mechanism where there is no possibility for default, or even if there is default, there are strong checks and measures to correct it. So clearing corporation takes 2 days to complete the loop of transaction. That is also granted. Now the only thing that happens in a intraday trade is that shares that should have come to your demat account will be credited to the demat account of the counterparty to whom you have sold those shares during the intraday hours. That is the only difference, which does not make any difference to the rights and obligations of any person indulging in any intraday. And there is nothing that prohibits in Sharia by entering into such a contract. So I maintain that intraday long transactions are okay.
And Jazakallah for the clarity and information. Also, I agree that the provisions help us to minimize the losses and take us to the profits, being Sharia compliant. Definitely.
What I would tell you the numbers. My firm in the last 6 to 7, we are only following Sharia compliant, although we don't explicitly state that everywhere, because we have also have to keep in eye that we are operating in such a country where it is not fine to shout all these things in the open every now and then. But our mode of operation is only Sharia compliant. We don't indulge in any non-Sharia compliant stocks or trading practice. Alhamdulillah, in the last 6 months, we have already crossed 30% returns by only trading in Sharia compliant shares. So there is no problem, and it is not something which I am saying that only I can do, or yes, we do it in a certain fashion using a certain strategy. But the most important point is that this has been done in Sharia compliant stocks only. So the opportunity is always open. There is nothing to worry. There is a lot of opportunity in the Sharia compliant space.
Hello, sir. It's almost the time for us to conclude. We had to.
Yes, it's up to you. Whenever you want to call it off, please do it. No problem.
Okay, we had to conclude by 10 o'clock, but still there are a lot of questions pending in the chat box. So it will be better for those people to record the contact number of Asa and contact him personally, because we don't have much time to respond to all questions. So it seems it's better to conclude right now. So I'm extremely pleased to thank you, sir, for having your valuable time to spend with us. And to be honest, it was really a very useful and beneficial session to all those students and participants who have participated in this. And you have been very sincere in responding to the all questions asked by our participants. So I use this opportunity to once again thank you. and to thank all those participants who made this program very successful. And we seek your help and support in the further proceedings of our department. We may be conducting further sessions on Islamic finance and similar topics. So we might be calling you. So we need your sincere support for all our activities. So thank you very much. Assalamu alaikum warahmatullah.
Thank you very much. It was a wonderful session and it was well organized also. The quality of questions were also very notable. I'm very happy that, the quality of questions was above average, and I'm very happy for that. And the participation was also very wholehearted. People have wholeheartedly participated. Thank you very much, and may Allah bless us all and take